The main objective in this presentation is to provide a comparison between two oil and gas companies, which are Petron and Petronas. We will outline the purpose of the comparison, followed by the performance that will determine the company's financial position in Malaysia. The financial information is based on the last 5 years, which is from 2017 until 2021. It is to provide the comprehensive analysis by using ratio analysis, where the type of ratio are liquidity ratio, activity ratio, leverage ratio, and profitability ratio. The reason why we choose Petronas and Petron as the subject for our assignment because we want to learn everything there is to know about the oil and gas industry and how each company's financial performance compares to that of its competitors. We can make a comparison and contrast, since Petronas and Petron are both major players in the oil and gas industry, but they have different business models, operations, and financial performance. Apart from that, Petronas and Petron are well-known brands in the natural gas sector, particularly in the transportation sector, and are famous for offering consumers high-quality petroleum products especially. So, analyzing the financial performance of both Petronas and Petron can provide valuable insights into the industry as a whole. For many occupations in finance and accounting, having a firm grasp of financial statement analysis is a need. Overall, choosing Petronas and Petron for this assignment can provide us valuable learning experience that has practical applications in the real world. Furthermore, we can learn more about the oil and gas business and hone our analytical skills by examining the financial performance of these two companies.
Assalamualaikum, I am Nurul Atira Mita Amat Yasir will present about the background and financial analysis of Petronas and Petron. Petroleum Legenda Berhad is the full name of Petronas. It was founded on August 17, 1974 to serve as Malaysia's National Oil Corporation. The corporation Petronas, which is fully controlled by the government, is in charge of developing and increasing the value of all of Malaysia's oil and gas resources. Petronas has developed into a fully integrated oil and gas production company from its initial role as only the manager or regulator of Malaysia's upstream sector. Since its initial investment, Petronas has expanded to become a global oil and gas company with operations in 31 nations. The Petronas Group has 103 fully owned subsidiaries as of the end of March 2005, 19 partially owned businesses, and 57 affiliated businesses. These businesses work in a variety of oil and gas related industry as the Petronas Group as a whole. The group is involved in a broad range of petroleum related activities, such as upstream oil and gas exploration and production to downstream oil refining, marketing and distribution of petroleum products, trading, gas processing and liquefaction, running a network of gas transmission pipelines, marketing liquefied natural gas, manufacturing and marketing petrochemicals, shipping, automotive engineering, and real estate investment. Petronas conducts business using the three main strategies of integration, value addition, and globalization. Exploration and production, oil, gas, petrochemicals, logistics, and maritime, research and technology, and corporate sustainability are their main business integration phases. Next is the background of Petron. The largest oil marketing and refining firm in the Philippines, Petron Corporation provides more than a third of the nation's oil needs. It runs a refinery with a 180,000 barrel per day capacity in Limay, Bataan. Petron distributes its goods mostly by sea from the refinery to 32 depots and terminals across the nation. Through the Philippine National Oil Company, FIN420, the Philippine government bought Esso Philippines Incorporation, which included Phil Oil Refinery Corporation in 1973. Esso Philippines Incorporation was renamed as Petrophil Corporation, and by 1974, Esso gas stations has adopted the name Petron, a combination of petroleum, PET, and research contained number RON. Later, Mobil, the successor to Saucony Vacuum Oil Company, sold PNOC, is part of the Phil Oil Refinery Corporation. Petrofuel Corporation was formed from the merger of the oil marketing and refining divisions of FIN420, including Fuel Oil Refinery Corporation. The name Petrofuel Corporation was changed to Petron Corporation in 1988. The company's refinery transforms crude oil into a wide range of petroleum products, including LPG, diesel, gasoline, jet fuel, kerosene, industrial fuel oil, solvents, asphalt, and mixed xylene. Mechanical lubricants and grease are produced at Petron's lube oil blending facility. In addition to being marketed directly to industrial customers, these goods are also sold through service stations and sales outlets, with the power industry constituting the main clientele. Jet fuel is another product that Petron provides to both domestic and foreign airlines. Through more than 1,200 service stations, they sell petrol, diesel, and kerosene to drivers of private vehicles and operators of public transportation. Then, we move on to financial analysis of Petron and Petronas. Firstly is the scale and global presence. Petronas is a Malaysian national oil company with a significant global presence, while Petron is a Philippine-based company with a more regional focus. As a result, the financial analysis of Petronas may involve assessing its operations across multiple countries and regions, including exploration and production activities, while Petron's analysis may be more focused on the Philippine market. Next is the regulatory environment. Petronas and Petron operate in different regulatory environments, which can impact their financial performance and analysis. Regulations related to pricing, taxation, environmental compliance, and licensing might vary between Malaysia and the Philippines, leading to different financial considerations for each company. The third one is the revenue streams and business segments. While both companies are involved in the oil and gas industry, they may have different revenue streams and business segments. Petronas, being a national oil company, may have a more diversified business portfolio, including upstream exploration and production, downstream refining and petrochemicals, as well as other energy-related businesses. Petron's operations may be more focused on downstream activities, such as refining, marketing, and retail operations. Lastly is the financial reporting standards. Petronas and Petron may adhere to different accounting and financial reporting standards based on their respective jurisdictions. These differences can impact how financial statements are prepared and presented, affecting the analysis of their financial performance.
Next is comprehensive analysis based on trend analysis from 2017 to 2021 for both company Petron and Petronas. First is about liquidity ratio. For net working capital, Petronas has a greater net working capital than Petron, indicates that the company is better or more liquid and the company has access to the current asset. For current ratio, according to the graph, Petronas has a greater current ratio than Petron, indicating that it can pay its current liabilities. For quick or acid test ratio, Petronas has a greater quick ratio than Petron and can meet its short-term obligations without utilizing the assets with the lowest liquidity. Second is about activity ratio. For account receivable turnover, because Petron is more effective than Petronas at collecting debts from consumers, Petron has a larger account receivable turnover. For average collection period, from the data above, Petron has a shorter average collection period compared to Petronas. Hence, Petron is able to collect the debts within a shorter period. For average payment period, from the data above, Petron has the longer average payment period than Petronas. Hence, it has the better availability of cash in the company. For inventory turnover, from the graph above, Petronas has the higher inventory turnover compared to Petron. Hence, the company is more effective to use inventory to generate sales. For fixed asset turnover, from the data above, Petronas has the higher fixed asset turnover than Petron. Hence, the company is better in using fixed assets to generate sales. For total asset turnover, from the graph above, Petronas' total asset turnover is larger than Petron's. This shows that Petronas is more successful at turning its asset into sales. Third is about leverage ratio. For debt ratio, from the data above, Petronas has a lower debt ratio compared to Petron. This shows that in terms of its debt obligations, Petronas has a stronger financial position. For debt equity to ratio, from the graph above, Petron has a higher debt equity to ratio than Petronas. This shows that Petron's capital structure has a bigger percentage of debt than equity, and borrowing is a more important source of funding for Petron's operations and development. For time interest earned, from the data above, Petronas has a higher time interest earned than Petron. This shows that Petronas is more financially capable of paying off its debt and has lower risk of missing interest expenses. And the last is about profitability ratio. For gross profit margin, from the above graph of gross profit margin between Petronas and Petron, the gross profit margin of Petronas is higher than Petron for each year. It is proven that Petronas is better than Petron in generating gross profit. But both companies had shown an improvement as their gross profit margin increased in some years. For net profit margin, based on the graph, it can be concluded that Petronas is more effective in generating net profit than Petron for these past 5 years. In the year 2018 until 2020, Petronas and Petron showed a decreasing net profit margin but increased it in 2021. Hence, proof that both companies are able to achieve higher net profit margin with the higher in net profit. For operating profit margin, from this 5 years analysis, Petronas has a higher operating profit margin for each year compared to Petron, indicates that Petronas is more effective in generating profit after deducting operating expenses. For return on asset, from the graph above, it clearly shows that the return on asset of both companies are dropping from the year 2017 until 2020. Meanwhile, in 2021, the return of asset of both companies increased. It can be concluded that Petronas is more effective than Petron because it has a higher percent of return of asset. For return on equity, based on the graph, the return on equity of Petron is higher than Petronas in 2017. But starting from the year 2018 until 2021, Petronas has the higher ratio compared to Petron. That means Petronas is more effective in generating net profit using total equity. Thus, Petronas has the ability in generating net profits to its shareholders.
Now, I will talk about the SWOT analysis of both companies. Firstly, the strength of Petronas is Petronas have a strong brand name and reputation in petroleum industry, demonstrated strong financial performance in recent years. For the weaknesses, Petronas dependent on the Malaysian market, vulnerable to fluctuation in oil price and supply disruption, high capital expenditure, and the opportunity of Petronas are growth into new market and geographical area, investment in renewable energy source to diversity the product line, rising the demand for natural gas and LNG. For the trade is government regulation, environment concern, political unrest, economic unpredictability, volatility oil price, and also supply disruption. For Petron, the strength is well-established name and reputation in the petroleum sector, a robust distribution system in the Philippines and Malaysia, wide range of products that include lubricant, gasoline, and diesel. The weaknesses is dependent on the Malaysian market, vulnerable to fluctuation in oil price and supply disruption, high capital expenditure. For the opportunity, Petron grow into new market and geographical area, invest in renewable energy sources to diversify its product line, and capitalize on the rising natural gas, and liquefied natural gas (LNG) demand. For the trade is petroleum company competition, government regulation, environmental concern, political unrest, also economic unpredictability, fluctuating oil price, and also supply disruption. So now let's talk about the way how company can improve their current financial. Liquidity ratio can be improved by cutting the operating costs, pay the liabilities, manage both account receivable and account payable. Next, to improve the activity ratio, the company need to have a strict credit policy, improve the inventory management, improve the operating costs, also forecasting the demand. So next is for leverage ratio. Leverage ratio can be improved by restructuring the company debt, provide a better inventory management, and increase the profitability. Next, to improve the profitability ratio, company need to improve the cost management, increase the sale, increase the profitability, and also create a budget. So right now, I will be explain about the significance and importance of the financial ratio analysis. Financial ratio analysis allow the business owner to compare their company to others company or their competitors based on the same variable. Each company is able to see their performance from the year to year from the calculated ratio. So this may help them to keep and find an effective way to improve their financial performance for the upcoming years. The financial ratio analysis is important information as it is used in the investment decision-making process. As for the company itself, ratio analysis can be used as a benchmarking for the planning and forecasting. The comparison between both company financial ratio analysis is very important for the stakeholder like investor, supplier and creditor, seeing it acts as a tool for measuring the business performance quantitatively. By using the ratio, it is simpler to evaluate a company performance to other business in the same sector. Ratio analysis enables us to recognize the risk faced by the company and how management address with it.
It is essential to take into consideration a number of criteria in order to estimate Petronas and Petron's financial success going forward. First, expectation on the future. They follow the industry and market trends. They should analyze the oil and gas industry developments and how they might affect the two companies. Second, the expectation on the future. They focus on company investment and strategy. Boards of the companies should evaluate their strategic goals and investment strategies such as their cost management technique. Third, the strength and stability of the financial. For the expectation on the future, the two companies' financial condition must be examined and taking into consideration aspects like revenue growth, profitability, and their debt levels. And last, expectation on the future, they need to prepare for indication of finance stability and adaptability to economic shocks. They can engage with financial specialists who have possession of the most recent financial information and market knowledge. As a conclusion, in the oil and gas sector, Petronas is a well-known and significant company on a global scale. The company's ability to profitably manage costs, produce income, and manage assets has helped to keep its finance stable. Thus, Petronas is a well-established and has strong financial capacities and strategically prioritizes diversion and sustainability. Meanwhile, Petron
also become a significant company presence in the oil and gas sector. Petron Financial Analyst raises some issues that demand consideration. Therefore, it is important for Petron to take into consideration its capacity for earning money and handle its debt levels to achieve a strong financial performance. That's all presentation from our group. Thank you.